What are the mistakes when it comes to investing in a prime location? Because a lot of times we like to look at property investment in terms of location, and even luxurious addresses, right? And in fact, in 2025, we are seeing a lot of the pricing of the not so prime locations already risen so much, such that it's so close to the more prime locations. And because of that, a lot of interest, there's a lot of attention on this locations now, that I thought it's so important to be aware of the mistakes that we need to avoid when you're investing in this sort of properties. So what are the common mistakes that we really need to pay attention to? Number one is thinking that all prime locations are made equal or are similar. Okay, and the next thing is that when we look at a piece of property and then we look at the price tag, when we compare to other properties just based on the price tag, if it looks cheap, naturally we'll assume that we're more inclined to think that it is a good deal. But is that really the case? And if not, how can we evaluate them more objectively? So what do I mean by all prime locations are not the same? Here we have our Singapore map, and shaded in yellow is our core central region over here, and then also here in the bottom here, the city, right? And in fact, why it's important to take note on these different areas is because they really behave differently. Because here in the city area, which is what we consider our downtown core, right? This is where we have our Marina, Maxwell, Tanjong Pagar, so on and so forth. Whereas on the upper left is actually the Orchard, Holland, Bukit Timah, all this, the so-called more luxurious, more prestigious sort of addresses. And in fact, the buyer demographic is quite different when it comes to these different subzones. Okay, so let's see whether we can identify any clear patterns in terms of how each district or each areas perform differently, right? Now, here is a chart that starts from 2014 to 2024, 10 years. And I've grouped them according to, for example, the red line here is the Central Business District. Then this one is our Orchard. This is our Bukit Timah, Holland. And then this one is our Newton, Novena, that kind of area. So straight away offhand, you can see that in terms of rental PSF, which one is the best? It will be these two, right? Our CBD followed by the Orchard locality. And also one thing to take note will be the transaction volume. Our CBD is about 20,000 in the last 10 years, and then D9 also about 20,000. Whereas for D10 and D11 is not so high activity in terms of one bedroom rentals. And if we were to take a look at the sales trend for one bedroom in the last 10 years, same time frame as well, using the same groupings, you'll see that something very, very glaring. The D1, D2, which is this line here, right? In terms of the pricing, is actually not the highest. So what does that mean? The rental, it managed to get the highest in terms of rental, but the price that you are having to pay for it actually is not the highest. So very clearly, for the price that you are paying for something in this district, it's likely that you can get something where the rental you are getting is much better value compared to the other districts. Why is rental so important, other than the fact that more rental means more money in your pocket, right? So now, the context here is that we are comparing in terms of a one bedroom. So when you are exiting in the future, your future buyer, what would they be most concerned about? Definitely it will be the rental yield as well, because more likely than not, they are looking at it as a pure investment point of view. So rental yield is very important for them in terms of making the numbers make sense. So I've made a quick simulation here based on average PSF, average purchase price. What would the estimated difference be in terms of rental yield? For CBD, you're looking at roughly about 4%, while the rest of the core central, you're looking at 3.3%. So if you want to sell at a price that is, as in next time you want to sell, you want to make capital gain. And assuming that the rental just stays same all the way for all entire Singapore, right? Then the question is, next time your future buyer wants to buy from you, because currently it's 4% and then you want to sell at a higher price than this, it still needs to be a figure, right, that would make sense for the investor. Maybe 3.5% to 3.8%. I mean, this is something I feel is quite reasonable that the investor can still consider, because anything below 3.5% typically is not so attractive for an investor. If you are buying the rest of the so-called core central region, and then based on today's prices, you're already only getting 3.3%. If you want to sell for capital gain in the future, how easy would that be? So I think with all this data presented, it's fair to say that if you want to go for something 1 bedroom, it will be tougher to get a good deal in your District 9 to 11 as compared to District 1 and 2. Of course, if you'd like to have a more precise, deeper analysis on any specific areas that you're looking at, you can reach out to me. My number is in the description box, in the comment section below, and you can reach out. So that was for 1 bedroom. Now, if you want to talk about the bigger size units like our 3 bedroom, 4 bedrooms, do take note that typically families prefer to go for addresses that's more lifestyle living rather than city centric, right? And you can see that in terms of the transactions. Actually, you can see it. Just now it was really close, right? Our CBD is really close to the District 9, but here actually for 3 bedroom, as an example, it's way lesser already. It's about easily 7 times lesser, right? But that's not to say that there's no demand. It's just lesser demand. But for the units that's available, they do get quite a bit of attention. For example, I do have one listing, one Burnham. That time was bought around 3.3 million. And then the rental is gonna get probably around 11,000. So that will work out to be roughly around 4%. So all in all, still pretty decent. I mean, for the investor lah. And one final point to make about this is that, especially for District 1, District 2, right, rental is so important because it's really closely related to the purchase or the selling price as to how absorbable it is lah. Because as you can see over here, once again, the red line, it was at one point of time able to hit this high over here. But as you can see, it's really quite volatile because I believe it is also closely related to the rental it can get. If the rental that it can command is not, if it doesn't make sense compared to the price that is asking in the resale market, then you will not be able to achieve it. Whereas you see the rest of the districts, right, our blue line here, that means our District 9, District 10, and our District 11. It's not so volatile. In fact, it's quite, all of them are steadily increasing one. And this leads me to the next point, which is why are there units in this District 1, District 2 making this sort of ridiculous losses? And understanding this is so important because as long as you are making a purchase, an investment purchase, this point will definitely be related to how you exit in the future. Now, for this particular project, in the early stages, someone could have bought a 3-bedder at roughly around this kind of pricing, which is fantastic, right? How I wish we could all go back in time to buy. 6 years later, this person sold at a profit, very, very good profit, very lucky, $2,500 PSF. And then this lucky buyer managed to flip it for an additional $700,000 in 1 year. But what happened 13 years later? Unfortunately, this is where I mentioned, right, the $1.2 million loss. So the question is, what happened? And I think one of the main reasons is that the element of speculation has been removed from the market in between, especially due to our 2013, our very famous cooling measures, right? And since, once the element of speculation is removed, it comes back down to certain fundamentals, which is, like what I mentioned, related to the rental yield for this area is so important, right? And let me show you what I mean by this. Now, for the second buyer, okay, let's say you had bought at this pricing 3 million, and then at the point of time, rental roughly around 6,000 thereabouts. Actually, right, the rental yield for that area, actually for that purchase, actually would have been quite bad already. It's below 3%. So in a way, at that point of time, I would have determined it to be a not so wise purchase already. In fact, definitely don't touch. The third buyer to pay a 3.7 million, and then the rental yield, did it go up? No, the rental didn't go up. The rental didn't even go up. So what could have justified this kind of price increase? Definitely nothing sensible. So the yield dropped even further, 2%. That is ridiculous, right? Now, the fourth buyer, when he paid 2.55 million, and of course the rental is quite a range, right? But let's say it's roughly around 8,000. It would be 3.76%. Now, 3.76%, is it considered okay? Remember when I showed you just now, I said that definitely if it's in between 3.5% to 4%, that is something that investors in general, they are willing to consider and accept. Because otherwise, it doesn't really make sense for them in terms of an investment point of view. And that is why I said that the rental and the rental yield will really help to determine the selling price. And why I keep emphasizing that this applies more towards the CBD area is because for other locations, like for example District 9 to District 11, depending on which parts we are talking about, the rental may not be so directly related to the performance of the sale price. And this is one very good example. Behaviour, freehold River Valley. You take a look at the prices here, and just quickly show you the profitable sales here, whereby you see a 2-bedroom, right, selling at a $3,500 PSF, $3.5, $3.6, $3.7,000 also have, and they're able to make profits. And this one is TOP 2024, by the way. So they were selling at around 2021 or 2020 lah, right? But what's the key thing here? This sale price that they are paying today, right, will translate to roughly around $2.8 million. But what is the rental? The rental not high, $6,000 only. So this means that the rental yield is only 2.5%, which is way lower than what I gave you the benchmark of 3.5 to 4%, right? And yet people are still willing to pay this kind of prices. So why is this so? It's because the people who buy here, they're not so concerned about the rentability, the rental yield whatsoever. They are paying for the River Valley address, they're paying for freehold, they're paying for the fact that there's not many such supply available in the market or even in that enclave. Another example here, Martin Modern. This is a similar location to the Avenue, but this one is leasehold, right? Leasehold. And good performance for the earlier buyers. And if we were to put these two side by side, we can see that actually, first and foremost, the price point for the two-bedder is very, very different. Almost 1 mil difference already, okay? But yet the rental is quite similar, right? Because people are not going to pay more just because it is a freehold. They're going to pay more rent, which also results in a very different rental yield. So Martin Modern, at this point of time, still okay, 3.6%. But the next buyer unlikely will pay you much higher price already lah, because if they pay you a higher price, then the rental yield will be affected. Which brings me to my next point, which is just because something is cheap doesn't necessarily mean it's better. Because what if you buy something cheap today, but in the future you're not really able to exit? And let me show you an example using the same two examples just now. Now, Martin Modern in 2021, 2020, you could have bought it on the resale market. And at the time, the purchase price for these two units, they were sold at roughly about $2,600 PSF. Price point roughly $2 million, right? But for Avenue, which was during its developer stage at that point of time, it was going at $3,200 PSF for same 2-bedroom unit, $2.6 million price tag. So quite a drastic difference in terms of price tag. In fact, you will easily say that, wow, 2.6 million, $600,000 difference. Definitely, this one is this Avenue will be a bad buy. But let's take a look at what happened recently in 2025. Martin Modern, if you're unlucky, it will be like what you saw just now, which is a negative sale. But also, there's a chance to maybe break even, that kind of thing. Whereas for Avenue, the same 2-bedroom is able to sell at a profit at $3,500 PSF thereabouts, which is about 2.9 million. So I'm not here to say that you buy this Avenue last time, definitely you can make huge profits, 300k whatsoever with a 2-bedroom investment. The question is, why is Martin Modern, even though the price point is so much difference, unable to perform the same way as Avenue? And actually, it boils down to the behavior of the development, behavior of the owners in the development, which I think is so important to understand. So here I'm just using a very quick example this can be seen in many other different projects, but I'm just using this chart to demonstrate. Okay, so this is a very typical life cycle of most projects out there that is fairly priced from the start and also not impacted by random or severely impacted by market forces. So just for an example, just to show what I mean by the behavior of development is so important. Behavior, right? Now, usually, right, you will have this first group of owners who bought in at the early stage. And then later on, when it's time to TOP, they will start to cash out on the resale market. So the first group, let's say they are buying around $900 PSF. This is just an example, right? And then the second group of owners, they are buying, let's say, around $1,200. So basically, the first group exit at $1,200. So now you will have two groups of owners. Now here's the issue. For this second group of owners, when they want to sell next time, and let's say a nice reasonable profit target, $1,400 PSF. Now, the first group of owners, right, can they also sell at $1,400? Definitely. But here's the thing. Do they have to sell at $1,400 to get the same amount of profits as $1,200? Actually, no. In fact, if you're talking about just $200 PSF gain, the 900 PSF group, they can sell at $1,001 and they are still getting the same amount of profits as the second group of people. Now, I'm not saying that this first group will want to sell below $1,200, but the thing here is that there is always an element of advantage that the first group of buyers have that impacts the performance of the second group inevitably. Of course, when it's a bull market and everything, everybody will all ask for as high as possible because we're all greedy, right? We want as high as possible. But the key thing is that there is really a difference in terms of the power dynamic when it comes to these two different groups of owners. And you can see from this part of the chart here where the prices is coming down already, right? And you may think that, hey, wow, prices is starting to come down and all that, but actually, is that really the case? Because if you think about it logically, right, actually it is just the first group of owners cashing out. So it's a perfect example of, hey, if I bought in 900, I can sell at 1,000, 1,001, 1,000 and still be able to exit when those people who had bought at these price points, they may be quite unhappy at this point of time. And this is once again what I determine to be the level of risk involved for any type of property. And once again, why this is so important is because the first group of people, they have a similar interest level in terms of the profit target. Whereas the second group of people, the second group of buyers, if there is not enough demand, there is not enough demand from the market to push the prices up, then this group of people are inevitably, based on their behavior, is going to limit your profit potential. Alright, and with that, I've come to the end of this video. So if there's any portions or any part of the presentation that you want more clarification or you want a deeper analysis on something that more specific to your situation, feel free to reach out to me at this number, and I'll see you soon.